Good afternoon. It's Friday, October 13th, 2006, and the market's just wrapped up with another excellent week for the bulls. I've got the mid-cap spiders on the screen right now, symbol MDY. And here again, this I think is the most important thing that's happened in the last 2 weeks. One, taking out this 200-day moving average. That was a big plus. We kind of chopped around Monday, Tuesday, and Wednesday near that level, kind of giving people doubts whether or not we were going to clearly break. But these higher lows and that upsloping 50-day moving average are what really we should have been focusing on, and we have been focusing on. Again, as long as that rising 50-day moving average is rising, this market is innocent till proven guilty, and the burden of proof remains on the sellers. They're the ones who have something to lose here, and clearly they are. We also took out the highs that we've been looking at from the July high and came very close to taking out this low here on a closing basis. And we may have. I'm not really sure. Today it looks like 43.37 is the close. This high here was 43.30. So we did take out that high as well. So when we look at a weekly time frame, we've got an excellent picture now for the mid caps. And I was more concerned back in here with this low volume. It was looking like a bearish flag in here, thinking that maybe it was going to break down. It didn't. The shorts are dead meat in here. They're just feeling a lot of pain, and that's what this type of quick rally is all about. And that's a great thing for us, as long as we're able to correctly ascertain which side of the market to be on. The other side deserves to lose. I mean, you've got no business betting against a market that's rallying like this. If you do, you're going to get what you deserve, which is losses. Just like, and that's not to be mean, just like if you buy into this weakness over here, you're going to get what you deserve, which is losses. And that's just the way the market works. The market is not a nice place. It's a place where people, very brilliant people work all day, all night trying to take your money from you, and that's what they're going to be able to do if you allow them by doing stupid things such as fighting the trend. S&P 500, it's overbought, it's overbought, it's overbought. So what? Who cares? That doesn't mean anything. Price is the only thing that pays us. MACDs, stochastics, relative strength, you can throw them all away at the end of the day because the only thing that pays is price. Doesn't mean those tools aren't important at certain points, but you can't rely on those for trading decisions. Trading decisions should come from price action. And clearly, the price action has just been nothing but bullish in here. We had a little scare this week where the market found support at that 5-day moving average when the plane hit the building, I guess. And the market's been very strong since then. And same thing with the SMH. The SMH was the final holdout group, and they were able to, and I drew that in the wrong spot. If we just take this high back here, they were able to get back above that resistance level as well as the 200-day moving average. Again, with this group's a little overbought, I would expect that we're going to have similar type of support trying to be found near that 200-day moving average over the next week to 2 weeks. But clearly, this is a convincing bull market. If you're not convinced, I don't know what you're looking at, but I unfortunately my call in the semis was right on too because we broke past that triangle. I bought the calls in here, and then I wasn't watching the news. I didn't realize it was just that plain. I took a very small profit in the calls, but here's the move I was looking for, and no looking back, no complaining, but. It sucks to get shaken out of a nice winner like that. Here's what we're looking at too in there. We're looking at this symmetrical triangle, which I said if we take the height of this, which is at about $35 a share, straight down to there, about let's just call it 33 to be conservative. Add that to the breakout point, which is 34.5. That gives us a target up near about 36.5 for the SMH, and I think that's very doable. What kind of time frame? Who knows? But the trend is clearly higher. That's what we need to focus on. Looking at the Nasdaq 100, same thing here. There's no reason to think that anything bad is going to happen here. We've got earnings coming up, and so far The market likes what it sees as far as earnings go. It's going to be difficult. It's going to continue to focus on individual stocks. And one of the most important things to remember for next week is be sure to know when the companies are due to report earnings that you're trading. Because if you're holding these things overnight, you can get blown sky high if you're in the wrong position.